to Friday at 12:30 p.m. only on Bloomberg Quint.
Good morning. This is all you need to know. I'm Agam Vakil. Let's start by taking a look at the global markets as usual. And what we're seeing is, well, perhaps some respite, if at all, any, in the American markets, which did close the day in the green. At least the Nasdaq did close higher by around 0.5%. But the European indices did show a little more weakness coming through, declining by around anywhere between about 0.3% to around 1%. As far as Europe goes. But Asia at this point in time is looking looking good because all the key indices are trading higher, save for the Nikkei, but it is marginally in the green. So the SGX Nifty thereby has seen an advance of around 42 points. It is very close to the 11,000 mark, and that's something that we're going to watch out for in the Nifty too in today's day of trade. And speaking of the Nifty, what we've seen was the Nifty close about 10,900 yesterday. The mid-cap and the small-cap indices doing better than the benchmarks. The Nifty and the banking Nifty PSU banking index, of course, are also advancing in trade. But among other sectors which stood out, we had the pharma index advanced by around 0.8%. But one sector which was really under pressure was the media index, which declined by around 4%. It was largely on the influence of Z Entertainment, which came off by as much as 8%. Moving on, let's talk about your ADRs, and we have seen some strength all through. So, your ICICI Bank, Dr. Reddy's, Vedanta, Tata Motors, all advancing in trade, save for something like a Infosys or a Wipro, which declined marginally. But moving on to your institutional flows, and once again it was marked by very small gross numbers in general, which is why FIs and DIs didn't have very large numbers on a net basis either. Coming down to your contributors, we have L&T, ICICI Bank and Reliance Industries advance. On the other hand, Infosys, Z Entertainment and ITC bear down on the index. But it's the futures and options space where things do become interesting, and this is where I do want to mention that we have a SEBI approval come through for the weekly trading options of the Nifty 50 now. Of course, we are waiting the dates when these options will be introduced, but this will follow and be on the lines of the Bank Nifty weekly options. That said, we're coming down to the futures and options space. Well, in futures, where very little activity in the Nifty futures, but the Bank Nifty futures did see more accumulation of longs towards open interest, even as the underlying advanced by around 0.6%. Moving on in terms of your change in options open interest, we did see a lot of writing around the 10,900 call as well as put unwinding coming through for the 10,700 and 800 calls and puts as well. The range at this point in time is a 200.1, at least in the near term for the Nifty 50. Well, should it not break above the mark of 11,000 in the near term, considering Nifty is banging between 10,800 and 11,000 right now. But in terms of the wicks, not too much movement here, at around 14.6. And moving on to your Nifty put call ratio, again, largely unchanged at around 1.58. It's the same for the Bank Nifty as well at around 1.51. But moving on, you have Ujjivan Financial, which did see a lot of longs come through. Buying coming along, and we also have a lot of buying coming along in Chennai Petro. Of course, this is the other one which advanced by around 5%, and with 20% added in open interest. And Berger Paints, the reason why this came on our radar was the 21% added in open interest towards fresh longs with an advance over as much as 1.7% in its underlying. So a whole host of stocks out there to watch out for. But with that, we go across to Paul Allen for the top international headlines.
Asian nations are being warned to expect further downgrades in the fallout from rising US interest rates next year. S&P Global Ratings has already trimmed its 2019 growth forecasts for Asia across the board, but now says there could be further cuts. The agency's chief APAC economist Sean Roach says trade-reliant nations such as Thailand, Taiwan, Korea and Malaysia remain the most vulnerable. The European Union is stepping up the pressure on Brexit, ruling out any piecemeal negotiations on aspects of the deal hammered out with Theresa May. Officials in Brussels tell us that if Parliament fails to ratify the bill next month, the EU will not seek what it calls a managed no deal, but will take unilateral steps to prepare for a hard divorce. Ministers in London admit they're taking a similar line.
We're sending a clear message that this needs to be much more of a priority for businesses up and down the country. The government's priority remains to secure a deal, but we need to recognise with 14 weeks to go that a responsible government is preparing for the eventuality that we leave without a deal.
President Trump has agreed to close his embattled charity that's been accused of rampant wrongdoing. The Donald J. Trump Foundation and New York Attorney General Barbara Underwood have agreed to dissolve the charity and give away its remaining $1.7 million. Underwood said the foundation was, quote, little more than a checkbook to serve Trump's business and political interests. Global news 24 hours a day on air and at TikTok on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Paul Allen. This is Bloomberg.
Donald Trump saying a rate hike would be a mistake. He says that balance sheet reduction, quantitative tightening, letting that run down, that's taking liquidity out of the stock market. He says Fed should figure it out and not hike. But a lot of people say, look, you're just painting the Fed into a corner. If they hike, which maybe that could hurt growth, then that is the problem, that possibly they're doing it just to show the world that you can't control them, and a pause would be seen as giving in. So with this in mind, let's look at some of the reasons why maybe the Fed should pause. Global stock markets under pressure and a global economy looking weak. Look at China in particular. Geopolitics like the trade war, Brexit, that vote coming up in January. Strong dollar threatens manufacturing in the U.S. U.S. housing market, a very interest-sensitive sector, continues to get weaker. Now, how about the reasons to hike? Well, Bloomberg Economics puts unemployment being low at the top of the list because that's pushing up wages. That's going to boost inflation next year. They say interest rates are still accommodative. Consumers are spending in the holiday season. Confidence still pretty strong. And GDP growth next year is going to remain above potential. So now let's jump into a Bloomberg chart. World interest rate projections work. And what you're going to see over here is it's about 2/3 now, about 65%. That's the chance traders see of this rate hike. Look down here, you can see this is how that's eased a bit over the past couple of months. The odds of no change have come up a bit, but nevertheless, that's still the predominant conclusion. And what about 2019? That's another big question. Will the Fed cut the number of dots it has representing the number of rate hikes next year? In September, it stood very narrowly at a 3 rate hikes consensus. Could that go lower in the light of all these things that are happening in the global economy and global markets?
There is some support coming down at 47.74. I would imagine that holds this week just as long as we don't see a build in inventories. One thing I do want to point out is last week on Thursday, crude ripped higher and did fail for the lower high for the fourth time below major 3-star resistance is what I'm calling it against for my clients. That was on news that there was a draw in Cushing. I think it was about 800,000 barrels for what is coming into this week. If that does not meet that expectation, we could probably slip below 47.74 very quickly. Also, I'm watching the Fed very closely heading into tomorrow. Are they going to encourage more of a risk-on sentiment? Is the equity market going to rally? I would expect crude to follow, because with that, you're going to get a weaker dollar. So there's a lot of moving parts this week, but right now, crude is very unenthusiastic, and I think rallies right now are just, they're very short-lived.
Yeah. How much attention is being paid to the equity market sentiment, Bill? It's not normally the way it works, but it does seem as if traders are paying much more attention to other asset classes and ones they wouldn't normally look at.
Well, you know, the equities, too, you're getting rallies. There's in the S&P, for instance, is being sold into the first time it hits maybe first resistance or second resistance. That happened again this morning. Crude is just the same thing. And so yesterday, when we saw the S&P and broader equity markets take a bloodbath, crude was a casualty. It was one of the first casualties really to go as well. I mean, crude has been crushed over the past 2 months, and there's not a lot of sentiment. Buyers are few and far down here at $50. You have some people holding back and trying to buy, but look at the volume here below $50. There's not very many buyers stepping up, and that's where the difficulty is. No one's taking that bet here.
Crude oil prices crashed to their lowest level since October 2017 on the back of reports of a big jump in U.S. inventories and forecasts of a higher than expected shale output, stoking concerns of a global supply glut. Brent crude prices, they ended the day lower by more than 5.5% on Tuesday to settle around the $56.3 per barrel mark after a U.S. government report on Monday forecast surging shale oil production. Additionally, prices came under further pressure later on in the day after the American Petroleum Institute reported U.S. stockpiles increasing by nearly 3.5 million barrels last week. Muted cues coming in as far as the base metal space is concerned, with all of the major base metal names ending lower on Tuesday, except for lead. Copper prices, they fell by more than 2.5%, their lowest prices on a closing basis since September 17. Aluminum ended the day lower by about 1% on the back of rising inventory levels, which have hit their highest level since May 24. Tin and nickel were the other two losers, falling anywhere between 1 to 1.4% each. On the other hand, we continue to see strength coming in the spot gold prices, which climbed for a second consecutive day, tracking weakness in the US dollars as traders await on the sidelines to get a better clarity after the US Fed meet.
Well, a bunch of news that we're tracking this morning. I'm going to start off with J. Kumar Infra, which has backed an order from NHAI to the tune of around more than 1,300 crore for the state of Delhi. Also, we're looking at PVR, where the board is going to be considering fundraising options in its meeting on December 21st. Also, Lemon Tree Hotel is expected to be in focus, given that the company has signed an agreement for a 69-room property in Pune, which is going to be operational by March next year. We're looking at NTPC, where an FE development has suggested, the reports have suggested that the government is likely to going to be offloading stake to the extent of 3 to 5% in the company via OFS route for getting a consideration worth around 3,500 to 6,000 odd crore. Also, we're looking at Fortis Healthcare, where Yes Bank has sold in more than 2% equity in Fortis Healthcare, and with this, the stake in the company gets reduced to 8.6% from earlier 10.4%. And last in the list, we're looking at Shoppers Stop. This stock is expected to be in focus, given that the company is going to be meeting Rare Enterprises, which is the Rakesh Jhunjhunwala owned entity, along with GM Financials and other investors on December 19. So clearly a counter that we need to keep an eye out on.
The Gujarat state government on Tuesday announced an electricity bill waiver for members across the state. Now this, according to the statement produced by the Gujarat state government, about 6.22 lakh customers across Gujarat will be able to waive or get a waiver on their electricity bill, and this is going to cost the state about 650 crore. What the state also said is that customers will have to pay about 500 rupees upfront, after which their entire bill amount as well as any penalties levied on them will be completely waived off. Customers who have also lost their electricity connections because of non-payment of bill can gain new connections through this scheme. What the government has said also is that this will be applicable for all bills up to December 18th, 2018, and the entire waiver scheme will last from December till February 2019. That is for about 2 months, where customers can go and avail these benefits. According to the state government, this is likely to help improve cottage industries and will also help improve farm produce because of better irrigation. That is what the state government has said in a statement.
People can actually buy medicines maybe multiple times over the same prescription over the counter, or it can be online pharmacies, and that is something even the health ministry has sort of thought over it, and there are solutions they've proposed which will require, a common platform or a seamless flow of information from the doctor to the pharmacy, wherein the prescription doesn't go to the hands of the patient. Now, unfortunately, that requires a lot of technology adoption by the doctors and by the supply chain as well. Even in the US, where the prescription doesn't go in the hands of the patient, there is a different problem of doctor shopping. So people go out and shop for prescriptions and then they purchase medicine. So this is a very, very, genuine problem, which, only if we move online or bring in a lot of digital sort of technology adoption across various stakeholders, only then we'll be able to address this. There is no other solution right now.
Mr. Shah, the other big concern, and I see as a reason for this clash between online and offline pharmacies, is the discount factor, isn't it? I mean, we have not talked about it so far, but the fact is that a lot of online companies bring in new customers saying that we'll give you up to a 15-20% discount on your bills, and people with chronic illnesses who need to reorder expensive medicines again and again are definitely want to avail of that.
See, what has already happened in the market, that the moment e-pharmacies came in the larger cities, the brick and mortar stores have started giving discounts to select customers on a repeat purchases.
Yeah.
So the patient has already seen the benefit of competition coming in. This will continue to happen because there is a margin of 10 and 20% between the wholesaler and retailer which manufacturer gives. Out of this 30% margin, e-pharmacies are willing to part with half of it and keep only 15%. So the norm is 15% discount e-pharmacies start giving to the patient. Now this would definitely hurt the offline stores.
On the big brokerage calls for the day, first we have is Phillip Capital on Jubilant FoodWorks. Now the brokerage has maintained its buy rating on the stock but has hiked the target price on Jubilant FoodWorks to close to 1,845. Now according to the brokerage, Jubilant FoodWorks is poised to deliver a strong third quarter of financial year 2019. Now Phillip Capital's channel check suggests that the company's same-store sales growth for the month of October and November was around 15%, and that was because of festive season and higher momentum coming in from the deliveries to railway station. Now the brokerage is expecting the company's EBITDA and net profit to grow 24% and 41% compared to last year in the third quarter based on this strong same-store sales growth trend, reduction in loss-making, late deliveries, lower fuel cost, and because of a sharp reduction seen in its Dunkin' Donuts business. Lastly, after a 20% correction seen in the stock price of Jubilant FoodWorks, the brokerage believes that the risk reward is now favorable for long-term investors in Jubilant FoodWorks. Second we have is Edelweiss on Biocon. The brokerage has initiated coverage on the stock with a reduced rating and a target price of around 430. Now, according to the brokerage, Biocon is the first serious Indian contender in the competitive biosimilar space. Company has so far invested close to $600 million in insulins and mainly on MBAs, that is the monoclonal antibodies, and intends to invest additional $800 million going forward in the next 4 years. Now the market is factoring in a revenue growth of around 27% for the biosimilar business for the next 10 years with an EBITDA margin of close to 35%, but the brokerage is expecting the company's revenue to grow at around 15% over the next 10 years with a margin of close to 35%, and that is because of two factors. Now price erosion that will intensify because of competition, and that will be very stiff in the MAB segment, while the market share gains in the insulin segment will also be very difficult because the innovator will be aggressive to protect its stuff, and these two factors will lead to a lower growth for Biocon going forward, says the brokerage. Lastly, the brokerage says that the expensive valuations leave no room for upside when it comes to Biocon, and the risk reward is now unfavorable for investors.
Respect the autonomy and independence of the Reserve Bank. At the same time, I would say that the relation between the government and the Reserve Bank is like the husband and wife relationship. There will be hiccups, there will be differences of opinion, but ultimately these must be harmonized in a manner that the two great institutions of the government and the Reserve Bank can work in harmony with you.
All right, there's lots of stories that you can find if you look up the website. There's also all the live market action that you'll find if you log on over the course of the day. Let me tell you about a couple of stories that you'll find if you log on right now. The NSE has received the SEBI's approval to launch weekly options on the Nifty 50 index. The move will provide a hedging tool to market participants to manage their portfolio risk more effectively. At least that's the intention. Yes Bank recommended to the Reserve Bank of India the name of its board member, Brahm Dutt, for the post of chairman. The seat has been vacant since Ashok Chawla resigned in November. That's all you need to know going into trade today. Up next is Indian Open, so do stay tuned. This is Bloomberg Quint.